Good morning, students. Today we are going to learn participants in money market. Under the chapter money market, who are the participants? Hope you all are learning daily lessons. So listen carefully and learn. If you listen carefully, that means that you have learned half of that portion. Okay, listen carefully. Who are the participants in money market? This is also one of the short answer. Okay, second short answer, 3-mark question. So here many participants are there in operating in the money market, and they deal with the securities, money market securities. They are the treasury bills. In the next heading we are going to learn treasury bills, then commercial bills and commercial papers. Commercial bills and commercial papers. Again, many instruments are there. We will learn in the next heading. Now we will see who are the participants in money market. So first, just listen. The government of different countries. So all over the world, governments of different countries. Many countries are there in the world. So those governments. So governments of different countries. Then next one, central banks of different countries. So each country is having one central bank. So they will be dealing with. So central banks of different countries. Then the banks. Again, private and public banks. Private and public banks. All the private and public banks. Then fourth one, mutual fund institutions. We learned already mutual fund. Those mutual fund institutions. Insurance companies. Around 10 are given. I will write and you will remember at least 7, 8. Okay, learn well and you write. Then after insurance companies, non-banking financial institutions. The development banks we have studied, maybe the private non-banking financial institutions. Non-banking financial institutions. Then RBI and SBI. You know what is RBI? Reserve Bank of India, State Bank of India. Both these banks. Commercial banks, all commercial banks. They are the main participants. Commercial banks. Then state governments. The state governments. Then at last the public. Public means all the people, public people, ordinary people like we. Okay. Governments of different countries, central banks of different countries, then connected with banks, private and public banks, then the extension of bank, mutual fund institutions, then insurance companies, then non-banking financial institutions, the main two banks, RBI and SBI, then all commercial banks, then state government, then public. Easy to study. Okay, it one of the 3-mark question. Second one. Okay, then the money market instruments. Next heading, money market instruments. We studied around 3, isn't it? Treasury bills, commercial bills and commercial paper. We will learn some more instruments. Money market instruments. So many kinds of money market instruments are available in money market working in India. Here up to 1986, till up to 1986, very few money market instruments only were available. They were treasury bills in the treasury market. Let's say we learn first treasury bills. That they deal with the treasury bills. The market is called treasury market. So treasury bills in the treasury market. Second one, money at call. Already we learned. That means they may get the money through phone. Okay. Call and short notice. There is another money market instrument. Money at call and short notice in the call loan market. In the call loan market. That market is called call loan market. There we get one instrument, money at call and short notice. Then the third one is commercial bill and promissory notes. That's the main thing. Commercial bills and promissory notes. This one is available in the bill market, from the word bill. Bill market. So only three. Treasury bills in treasury market. Second one, money at call and short notice in the call loan market. Then commercial bills and promissory notes in the bill market. Now again some new instruments have come into the market that we will see. Four more. Yes, the new additions. Till 1986 only we had those three instruments. Now after 86 they have introduced four more instruments that we will learn. Okay, commercial papers. Commercial bills we have studied. Now they have introduced commercial papers. Then the second one, certificate of deposits. This we are going to learn under one heading. Okay, certificates of deposits. Then interbank participation certificates. Interbank participation certificates. Interbank participation certificates. Repo instruments. Repo instruments. These are the money market instruments that are introduced newly in the money market. Okay, commercial papers, certificates of deposits, interbank participation certificates and repo instruments. So some of these we are going to learn. Okay, so you have to learn this one as the very short answer, fifth one. Very short answer from the beginning. There are three, here four. Learn this one. Now we will learn the treasury bills. That is the first one. What does it mean and what it is? We will learn treasury bills. So totally we have 7 instruments we have studied. So under that one we are going to learn in detail this treasury bills. These treasury bills are, it is issued by the government. Who is issuing this one? They are issued by the government. Most of and it is issued by the government. These treasury bills are like promissory notes. That is issued by the government. Why it is called a promissory note? Because the government promises that the amount mentioned in the treasury bill amount will be paid on the due date. Due date we know, since it is the money market instruments, they are matured within 1 year period. So on the due date the government is promising that it will pay the amount. And the period will not exceed 1 year. Now we will learn the features, general features of this treasury bills. It is one 3-mark question. Only 5 points available. 3 marks question. Number 1. What are the general features of treasury bills? Okay. Number 1. Issuer. Issuer is the government. So there will be an issuer of this treasury bill. Then finance bills. They provide finance because when government needs a large amount to invest in some projects, it will issue these treasury bills. So on the due date, the government will repay that amount. So it is finance bills. Third one, liquidity. Liquidity is there. What is the meaning liquidity? We can convert that into cash. The treasury bills can be converted into cash within 1 year period. Then it is the vital source. What is the meaning vital? Important. It is an important source of collecting fund from the public. That is vital source. Then the last one is monetary management. Monetary management. Because they can, that money, they are collecting large fund, and there is some proper management of this monetary fund. They are issuing and collecting fund, and on the due date they repay that amount. That is the proper procedure. So monetary management. So these 5 points you have to study. It is one of the 3 mark questions. Issuer, just to understand that term only I have explained. Issuer, finance bills, liquidity, vital source and monetary management. This is 3 mark question number 1. Then types of treasury bills. Types of treasury bills. We know the treasury bill is issued by the central government to meet their short-term requirements. Okay. To meet the short-term requirements, the central government is issuing these treasury bills. Then there is a secondary market also for this short-term, the treasury bills. So now we will see, because of the short-term, the term only, we are dividing this. Even the money market itself is matured on the period of 1 year. So we will see that, as per the number of days, again these treasury bills are divided into 3. That means the types of periodicity. On the basis of periodicity, again these treasury bills are divided into 3. 91 days treasury bills. It will be matured on 91st day. Okay, so 91 days treasury bills. Then into 2. 182 days treasury bills into 2. 364 days treasury bills. That is 1 year. Understood? 3 types of treasury bills available. 91 days treasury bills, 182 days treasury bills, 364 days treasury bills. Now we will learn just 1 or 2 sentences about these types. 91 days treasury bills are issued at a fixed discount rate. 4% discount rate will be there. Discount rate. It is issued on auction. Auction, you know. Yelam. They will sell, one. In the churches, they will sell the products on auction. They will say they will loudly call the price, and if anyone wants to increase the price, another person will increase. Then the one person who calls out the price will say that price, the high price. Like that they will call, and if anyone is not ready to call for more rate, then he will say thrice the rate, and he will deliver that goods to that person one who has called for the highest price. That is called auction. So it is issued for discount. Fixed discount is there, 4% discount. Okay, then the second one, here this 91 days bills are held by Reserve Bank of India. Reserve Bank of India only hold this 91 days treasury bills and 182 days treasury bills. They will sell them. Okay, throughout all the days they will sell this one. Then the second one, 364, the third one. It doesn't carry any fixed rate. No fixed discount rate, nothing. Here, no discount rate is there. But this discount rate will vary. The discount rate will vary as per the participants, those who are participating in the auction. Because the participants, like auction, the discount rate also will be varying because of the auction and the auction by the participants. The rate is not fixed, it will vary. Discount rate, understand? The discount rate will be varying according to the participants. This will be accepted by the authorities. They cannot call the rate which is not in their control. So it should be authorized or accepted by the authorities. Some people will be like the management. Some people will be given the authority to do the auction. So that discount rate, because it will vary, it is not fixed as in the case of 91 days and 182 days treasury bills. Here 364 that days treasury bills, there is no fixed rate. It will be varying as per the will and wish of the participants during the auction, and that rate must be accepted by the authorities. This rate is called cut-off rate. This rate is called cut-off rate. You have understood the types of treasury bills. This is also one of the 3-mark question. 3-mark question, third one. Type of treasury bills. Now we will learn the next type, second one, certificate of deposit. Certificate of deposits. It is called in short CD. CD, we say that come back to disk in computer, isn't it? Here in commerce they say that to mention the certificate of deposits they call as CD. So certificate of deposits are also short-term deposit. Short-term deposit means within 1 year. 1 year period. It is issued by the banks, maybe the central bank, then commercial banks and financial institutions, to meet the short-term requirements. But this amount will be of large amount. Financial institutions, okay. It is raised for the large amount and it will be issued by the banks and financial institutions. Here this also we can convert into cash easily, so there is liquidity position. We can convert into cash within the short period of time, so liquidity is available for this type of securities. Here they have one special facility that is negotiable. It is called a negotiable instrument. What is the meaning? Negotiable instrument. Bill of exchange is a negotiable instrument. We have studied in accountancy also. What is negotiable instrument? This can be transferable. We can transfer. We can transfer from one person to another. So by endorsement, how we will transfer endorsement? As in the case of check, at the back of this check we sign and transfer that one to another person, and we have to deliver that instrument also to the person to whom we are endorsing. So through endorsement we can transfer the title of the goods. That means the title of the goods, the ownership of that instrument is transferred from one person to another. So It is called negotiable instrument. It is called negotiable instrument of deposit. Negotiable instrument of deposit. Original name is certificate of deposit. Since it can be transferred from one person to another person through endorsement, it is also called a negotiable instrument of deposit. Now, who are issuing this one? The commercial banks, financial institution. They are the issuers. Now, who can subscribe them? Who will buy them? Subscribers we can call. Any individuals can buy. Individuals, the public. Then any corporations, big corporations, big companies. Then any trust organization. That means the not-for-profit organization. That is called a trust. Then any association. A literary association, not-for-profit organization we studied. That one. Association. And NRI. Non-resident Indians. Those who are residing in foreign countries. All these people can subscribe for this certificate of deposits. Here it is called a bearer instrument, like a check. Bearer instrument. One who is having that instrument can get the amount, because that ownership can be transferred from one person to another person. So it is called a bearer instrument, bearer certificate. And it is a document of title to a time deposit. Document of title. Because the owner, title means the ownership. That is transferring. But there is a time limit. Within 1 year it will be due. Now we will learn the features. There are 5 features of this certificate of deposits. The first one, it is a document of title to time deposit. What we have learnt only will be coming under this features. Features is also one of the 3-mark question. 3-mark 4th question. Okay. Document of title to time deposit. It is a document of title, because one who is having that ownership, one who is having that document is the owner. That is document of title to time deposit. Why? Within a year it will be matured. Understood? Then second point is, it is unsecured. Unsecured negotiable instruments. It is a negotiable instrument, we know. We can transfer the title of the instrument from one person to another. Why it is called unsecured? Because if any person, one who has lost this instrument and any other person has got it, and if they take that instrument to the particular bank, they can collect the cash. So it is unsecured. Okay, so we should handle this very carefully, this unsecured negotiable instrument. Then another one about the negotiability. It is said it is freely transferable. There is no condition to transfer. It is freely transferable. How? By endorsement and delivery. Endorsement is, what is endorsement? We will sign at the back of the instrument and we will write the person to whom we are going to transfer. That is called endorsement, and we should deliver that instrument to that person to whom we are transferring. That is, it is freely transferable by endorsement and delivery. We have to deliver the instrument to that particular person. Then it is issued at discount. The face value. If we need that amount within before the maturity period, we can issue this instrument at the bank, and they will reduce some amount as discount. So the remaining amount we can get from the bank. That is why it is called, it issued at discount to face value. The face value may not get, less than that price we will get if it is very urgent for us. Then the last one, it is repayable on a fixed date without any grace days. For check and promissory notes, there is some grace days. 3 days will be added along with the due date, even for the customers. Ordinary sale. For the creditors, they will provide some days as grace days. So if the due date is today, again after 3 days, we can go to that particular creditor and debtor, we can collect the cash. So this one, it is repayable on a fixed date without any grace days. The grace days means that you will learn. I think you have learned already. Grace days will be around 3 days. That is not allowed in this certificate of deposits. This is the 3-mark question, fourth one. Okay, we have marked all the question answers also. Today we will complete with this one, because you have to learn all the things as question answers. Participants in money market, 3-mark question. Then the money market instruments, all the 3 plus 4, 7. Then treasury bill market, that features also one of the question. Then types of treasury bills, another 3-mark question. Then the certificate of deposits. Certificate of deposit also, meaning, that is 2-mark, that I have not marked. Certificate of deposits. That is also one of the 2-mark question. Third one. Okay, up to the subscribers. Then the features. All these question answers you mark and learn. Mark in the book and you learn. Okay, students. Now we will close today's lesson. We will meet tomorrow. Thank you.